Good afternoon, everyone. My name is Joseph Marra. I'm here at the Yonkers Chamber of Commerce, and I'm going to talk to you about the recent legislation that came out in the end of December that changed the CARES Act. Now, you're all interested in the second PPP loan, and I'm going to tell you about that. But first, I really should understand a little bit about the first PPP loan, even if you applied for one and received it, because everything regarding the first PPP loan pretty much applies to the second PPP loan, and they made changes retroactive to the first PPP loan. Okay, so Patrick, look at page 1 of my outline if we can. All right. This basically has a summary of what went on early last year to the middle of last year. And as you know, the CARES Act was enacted the end of March. It was revised a couple of times. Funding ran out. They refunded it. Another law came out in June. All right, now we're going to go to the top of page 2. And the latest act, which goes by 3 different names, as you can see them on the outline, but we'll call it the Economic Aid Act, that's the shortest of the names, was signed into law by former President Trump on December 27th. One thing that's interesting about this law, it was the longest and most detailed legislation ever passed by Congress, almost 6,000 pages. And it changed various programs. So I got to tell you, I did not go through all 6,000 pages. I didn't go through hardly any of it. What I did do was go to lectures myself and go to the SBA website, which has a lot of good information. And one thing they do, they publish something called interim final rules, which is an explanation to the public, and then shorter versions of that in more condensed layman's terms, so you could see what's going on. And they've been very busy over the last few days. Between the 14th and the 19th, I don't know how many pages they've published. I haven't gone through all of it yet, but I've gone through a lot of it, and I think what I could tell you is pretty much up to date and accurate, although as this legislation has been since the beginning, it's all subject to change. All right? So let's basically talk about what the main four programs on the CARES Act. You can see that on page 2. You have the Paycheck Protection Program, the Economic Injury Disaster or EDIL loans and the associated grants. Then you had some small business tax provisions and some debt relief. Now, there were rules regarding retirement plans. I'm not going to talk about those because if you didn't take advantage of them in 2020, as of right now, they're gone. So there was, you didn't have to take a required minimum distribution on IRAs, things of that nature. But we're back to 2019 rules on retirement plans, so we'll kind of skip that. All right. What we're going to focus on is the PPP, the EDIL loan, and something else that wasn't really a big deal back last year, but it could be now, and that would be the ERC, the Employee Retention Credit. So we're going to focus on those 3 things. With respect to the Paycheck Protection Program, well, let's say you didn't get a loan the first time. You decided you didn't want to do it. Guess what? You now can go do it. It's reopened until March 31st. What I'm sure most of you are interested in is the second draw. You're allowed to go back and get more if you meet certain conditions, which we'll discuss after we discuss the PPP loan in general and the changes made to it, because there were many. Well, there were some, and they were substantial, and they applied to the second round as well. And then there were further modifications involving the second round. Okay, so now we'll go to the top of page 3. What's the purpose of the PPP loan? To get employers, to keep people on payroll. That's the purpose. So keep that in mind. That's what they're trying to do. They wanted employers to keep people on payroll. And one thing, some Schedule C people, meaning people who are solopreneurs, independent contractors who get 1099s from other people, they didn't really realize that. They said, I don't have employees, I can't get this. Well, yes, you can. You qualify for this if you're a Schedule C. As you'll see later, you don't get as good a deal as other entities, including single-member corporations or LLCs who decided to be taxed as C Corps or S Corps. In connection with this program, they get a better deal. But still, you can get something out of it if you're a solopreneur with a Schedule C. Very important. Another distinction while we're talking about that is if you're giving out 1099s for independent contractors, that's not considered payroll, and we'll talk about that in a minute. But if you're getting them, well, that's, for your purposes, that's part of your Schedule C income. Also a very important distinction. But let's go back and we'll talk about what happened with the first draw. Well, it reopened on January 11th, and it's open till March 31st. Okay? How do you get the money? Same way you did before. Find a lender who's involved with the SBA and the program and file an application with the lender. The Congress gave this program to the SBA to implement. The SBA, in turn, entrusted a lot of it to lenders because of the vast scope of this. And as you'll see, there's certain things that if you borrow under or over a certain amount, there's different requirements. Two main borderlines are $150,000 and $2 million. Bottom line is, if you borrowed $2 million first time around, well, you have to provide the most documentation. The SBA is going to audit you. If you're under $150,000, that's the least amount of documentation and the easiest to get forgiveness on. So keep those two things in mind. There's a lot of lenders. You could search the SBA's website. I'm sure if you went for a first draw, you know who your lenders are. Probably makes sense to go back to them, although you don't have to, but it probably makes sense to do that for the second one. They revised the application on January 8th, and you'll see as a link I have in my presentation to the site. Now, I will be sending this outline. It's not going to be available for you right now because, quite frankly, I have to update it a little bit. I plan on doing that over the weekend. I'll send it to the folks here at the chamber, and then they'll make it available to you. But right now, there are a couple of typos and inaccuracies that I want to correct before I release it. But so you file the application, and by the way, preference was given to smaller banks, banks with under $1 billion. They opened their application portals on January 15th, at least they were able to, and the rest of the institutions opened them on the 19th, which is 2 days from the day of this recording, which today is the 21st. So the SBA has been busy publishing things, all right? They published on January 6th the interim final rules, which they've constantly been revising with respect to the first draw PPP. Good thing about this is if you didn't look at any of the other versions, you don't have to, because they brought everything up to date with this version, and they did make various changes since the program was first instituted. So that, as you can see the citation, it's SBA-2001-0001. And it really has a lot of examples and a lot of different information. Be good to look at it. Plus, they've also released over the weekend a smaller, like question and answer type of thing, which gives you the condensed Reader's Digest version. So you might want to just look at that to get some background. Well, now we're going to page 4. All right. Well, one thing though, bottom of page 3, this is a very interesting thing. And if you read what I wrote here, it says the new rules allow you to refinance an EDIL loan, if you know what that is, we'll talk about that in a minute, that you received between January 31st, 2020 and April 3rd, 2020. Okay? Which, I mean, when I went to a couple of lectures, no one really talked about that. I asked a few people about it. They denied it. But when I looked at the SBA's rules, it was in black and white. It was provided in all their examples. So you'd be thinking, great. I took a first draw. I took an EDIL loan. Now I can go and get the EDIL loan totally forgiven. Well, not so fast. The main reason is, at this point, I don't see anything that allows you to go back and reopen your first loan application. So particularly if you've already applied for forgiveness on the first loan, forget it. You're out. The question is, and I couldn't find anything on this, can you go back and open up the EDIL application? I'm sorry, the PPP application, and then put in your EDIL money. And by the way, for purposes of this, the EDIL money is considered payroll, which you'll see why is very important. But right now it looks like you can't. I recommend that everyone maybe speak to their congresspeople and try to talk to them about this. It seems a little silly, because bottom line is, if you never applied for a PPP loan and you're going to do it now, and you took an EDIL during that period of time, you can probably get the whole thing forgiven. So, but those of you who took loans, PPP loans, spent the money, and or ended your covered period, and or filed for forgiveness, you are out of luck. So that's very, very important. It's something everyone should be aware of and be looking at. One thing about this, Congress said we're going to guarantee the loan. So they sent to the lenders, loans 100% guaranteed. Now we're on the top of page 4. And said we're going to guarantee the whole loan. So that gives the SBA and gives the lenders some cover. But they still ask you for a lot of documentation. And a couple of reasons for this. One, they might get audited by the SBA. They might pick your loan out and they might audit you. So they want to have backup. Two, the lenders are actually allowed to sell this paper in the open market. So they're going to have backup for the paper to sell it. So you really got to follow what your lender tells you. You might look at something in the SBA promulgations or the statute and say, well, that isn't what they say. But you know what? The lenders might have their own little requirements. They're going to try to make it as easy as possible, I would think. But still, you got to comply with what they want. And in the first round, I understand for most, once the lenders got the hang of it, it went relatively smoothly. The beginning, as most of you may know or remember, was a disaster, but things got smoother as it went along, and I'm sure it's going to be smoother now still for first-time borrowers. Right? So remember, we're going to talk later about the employee retention credit, but if you applied for that in 2020 already, you may not be able to go for your first draw, but we'll talk about that in details. A little confusion about that, but you may or may not, depending on your circumstances, but just keep that in mind. Last year, it didn't make sense to apply for this employee retention credit. In light of the changes in the law, it might make sense to do it now, and under certain circumstances, you can apply for a PPP loan and for this credit, but we'll talk about that later. What form of businesses can apply for a PPP loan? Well, just about any legal business that were in operation on February 15th, 2020. You're going to see in my list here of the various forms: sole proprietorships, independent contractors, partnerships, limited liability companies, nonprofits, veterans organizations, all types. They did this now. There's food service organizations with this 72 NAICS code, which is something put out by the Census Bureau, which I never heard of before. But not that I didn't hear of the Census Bureau, but I never heard of this code. But it's important when applying for a PPP loan. Housing co-ops are now on the list. News organizations with a certain code, NAICS code. There's actually seasonal businesses now, eligible to get this loan, as are legal gambling organizations. Ineligible businesses, well, ones that are permanently closed or bankrupt. So if you're permanently closed or you went bankrupt, you can't apply for a PPP loan for that business. You're out of luck. If you're in bankruptcy now, or you file it when the application's good, you can't do it. They're not going to give you the money. Obviously, if your business is engaged in illegal activity, you can't do it. So the local bookie can't go and get a PP loan. Well, that just makes sense, right? Another business that can't do it, which I find kind of odd, is businesses that basically are engaged in household employment that, say, have maids or nannies. They can't get a PPP loan. Another one I find a little odd: any business where at least 20% of the shares are owned by persons or people who have criminal records, certain criminal activity. So I did get a call from someone. He said, I'm a convicted felon, but that was 10 years ago, and now I have a business, been going really well, but now I need the PPP money, and I can't get it. What can I do? Nothing. This is the legislation. Talk to your congressman about all you can do to get that changed. And they didn't change it in December. If you're delinquent on a current SBA loan, you're also out of luck as far as applying for a PPP loan. And as I said, your business has to be in operation as of February 15, 2020. It can't be closed. It can't be bankrupt. Right? There's a new grant, which we'll talk about at the end, called the Shuttered. I have it spelt wrong. One of the things I have to correct. The Shuttered Venue Operator Grant. And that's for shuttered venues. So if you're eligible for a credit under that program, which by the way still hasn't gotten up and running, you can't apply for a PPP loan. You go for that grant. Hedge funds. There was debate before whether they could apply or not, and now there's no debate, they cannot. So what's the amount of the loan? Big question. How much can you borrow? Well, on your first draw, that's what we're talking about, folks. Right now, we're talking about first draw, and we'll get to the second draw and the changes. But now on first draw PPP loans, how much can you borrow? Up to maximum $10 million. $10 million. That's the maximum. But how do they calculate this? Well, they take something called your average monthly payroll. Average monthly payroll, it's a term of art. We'll go into that in a minute. And then take that average monthly payroll, multiply it by 2.5, and that's your first draw PPP loan with a maximum of $10 million. 500 employees or less, there's issues about was that per location. If you're that type of person, talk to your accountant. But 500 employees or less, what's average monthly payroll? What does it constitute? Well, for Schedule C people, it's your Schedule C. It's a line on your Schedule C. The examples tell you exactly what line to look at. Go to your Schedule C and pick it out. That's where you get the number. For everybody else, that's Schedule C with no employees. Schedule C with employees, well, it's a little more complicated. And also, as you'll see, as I mentioned earlier, people with Schedule Cs actually get less money for themselves than they would if they employed themselves as a LLC filing as a S Corp or a C Corp, or they were an S Corp or C Corp. Those folks would get more money than a solopreneur filing a Schedule C. Once again, why? Who knows why? But that's the law. What's salary? Now, if you have a business, you pay people payroll. Well, that's easy, right? That's an easy part of it. But keep in mind, there's a cap of $100,000. So $100,000 on an annual basis. So you have to, if somebody's making, if your payroll, let's say one person on your payroll is making $125,000. Right? For purposes of computing your average monthly payroll, you have to cut that person's salary by $25,000 to get them to the 100 limit. And then you factor their salary in. So obviously if you have 4 people, making $200,000 each, that's $400,000 you cannot include when calculating your average monthly payroll. So keep that in mind. There's a $100,000 cap per person, per employee. What else? You say, can I pay them sick leave? Yes. Severance? Yes. Separation pay? Absolutely. Also consider an average monthly payroll. Things like group term life insurance, disability insurance premiums, health insurance premiums, dental, vision, all these benefits we provide for our employees, plus 401k contributions the employer makes. Right? For the employees. When it comes to Schedule C people and IRAs, we'll talk about that in a minute. These are all part of average monthly payroll. But now an exception to the exception. Remember I said you have to cap people at $100,000? In doing that cap determination, these fringe benefits don't apply. So for example, you're paying someone $125,000, but you're also giving them $30,000 a year in these fringe benefits. Well, for purposes of this loan, it's $130,000, not $155,000. You cut the 25 off. All right. So healthcare, retirement, other forms of compensation doesn't apply. The $100,000 cap only applies to direct salary. Another thing is FICA, the Social Security tax the employer pays, you don't put that in, and Medicare tax, so that's not included. And by the way, if you have, now we're doing things remotely, right? Some people actually have employees working outside the United States. Don't count them either, they're out. And if you got a certain sick leave or tax credit, and you know, for wages paid, you don't get that. So just make sure you didn't get a tax credit for certain sick leave. And that's one of the statutes you'll see on page 5. It's the Families First Coronavirus Response Act with a credit. All right. So you'll see a basic formula on the bottom of page 5, how to calculate it. Take the aggregate payroll cost, meaning the annual payroll costs. You subtract salary over 100,000, divide it by 12, right? That's your average monthly. Multiply that by 2.5. So it's your average monthly payroll times 2.5, and that's your loan. Average monthly payroll times 2.5. So if your average monthly payroll is 100,000, your loan's going to be 250. So that's the amount of the loan, capped at 10 million. So I'm sorry if I may have misspoke before and just said average monthly payroll. No, it's average monthly payroll times 2.5. Now, some of you heard 3.5. Well, that's related to second draws. We'll get to that later. Okay. Now, let's do a little segue. I'll give you a brief background on EDIL, and because it factors in here, and then we'll come back to it later. EDIL loan is a disaster loan. It's like they did that with Katrina, and businesses were ravaged by natural disasters. They were able to go to the SBA and get an EDIL loan. They applied that to coronavirus and allowed people to get those loans. They also had what was called an EDIL advance. So if you applied for it, whether or not you got the loan or not, or even applied for the loan, they gave everybody an advance up to $10,000. First they thought it was going to be $10,000 for everyone. Then they said, no, it's $1,000 per employee up to $10,000. But originally, the statute originally said that the EDIL loan advance was not going to be forgiven. So if you got if you took a $10,000 EDIL loan advance and you have a $100,000 PPP loan, you're only eligible to have $90,000 forgiven. It's not the case anymore. You don't have to worry about the EDIL advance. They made that forgivable. I also heard that they were going to just give everybody the difference. If they didn't give them $10,000 first, they were going to give them the difference. I did not see anything about that in the regulations, so we'll see how that goes. You may just find a few $1,000s in your bank account and you won't know where it came from. Well, now you know where it came from. So if you look at the top of page 6, it shows you about the calculation if you're a Schedule C person with no employees. And you could see that the maximum amount is going to be $20,833. All right? That's going to be it. That's the maximum amount of the loan. Whereas if you were not a Schedule C and you're an employee of a corporation or a PLC or an LLC, it would be more than that. So on page 6 has all these, basically how to compute your loan with employees, without employees. I took this right out of the regulation. So this is what they gave as examples. It's pretty easy to follow. Now, if you look at the bottom of page 6, remember we were talking about earlier, if you were going for a first draw and you had an EDIL loan, you might be able to wrap that into your first draw PPP and then get the whole thing forgiven. But can you go back in and open up an application that's been filed to do that? Right now, I don't think so. If you look at the bottom of page 6 of my outline, it cites page 76 of the latest interim rule that was released July 6th by the SBA. And according to this, you can only go back and open the first loan if you were approved for a loan, you didn't take it. Remember, there was some bad publicity that was out there. People got afraid. I don't want the money. They didn't take it. Well, now you can go back and take it. You didn't take all of it. Well, now you can go back and take the rest of your first draw. You didn't accept the full amount that they approved. Those are the only 3 ways you can go back in on a first draw that you already applied for. Can you then wrap around your EDIL loan if you can go back through these? I don't know. That's an unanswered question at this point. So, but something you should keep track of and talk to your accountant about as time goes on. So as I said, bottom of page 3, those are the only 3 times under the current regulations you can go back in. I'm sorry, bottom of page 6. It's the only time under the current regulations that you can go back in and open the EDIL loan first draw. All right? Well, now we go to usage. Well, it's 2.5 times average monthly payroll. You get this money. What do you do with it? Can you go like pay off your credit card bills or business loan bills? No, you can't. You can't do that. You have to use it. You have to use it within a certain amount of time for specific reasons. Right? When the loan first came out, you had to use it within 8 weeks. And people are going crazy. How am I going to use it within 8 weeks? When's the 8 weeks start? Then they said, okay, you could pick 8 weeks or 24 weeks. Well, now they've made it really easy. You can pick a period. You could pick any time between 8 weeks and 24 weeks to use the money. That is very important for forgiveness, as we'll see later. That time period, when you use the money, that 8 to 24 weeks that you pick the time period, that is called your covered period. Okay? And you have to use the loan within that period. And what can you use it for? Well, for forgiveness purposes anyway, at least 60% has to be used on payroll. All right, and the payroll costs, as we discussed earlier, what are they? Well, they're listed here again on top of page 7 of the outline. And 60% on payroll, and then 40% on other allowable things. And they've expanded this list, by the way. So, mortgage interest payments, rent payments, interest on debt you had before February 15th, 2000. You can use that as well, but only the interest part. How do you segregate that out? I don't know, but that's what the law provides. Once again, as I said, you can use it to refinance EDIL loans, SBA EDIL loans, and their language I'm quoting exactly, made between January 31st, 2020 and April 3rd, 2020. Very specific during that time period. Most people, by the way, they were just giving out $150,000 when you filed an application. That was kind of the limit. Supposedly the EDIL loans were limited at $2 million, but they were giving everybody $150,000. Not everybody, but most people, most entities, $150,000. A couple of other things they added to this 40% groupage. You know, things like cloud software. Things to make you more easily mobile. You can add that in. Also, interestingly, if you had property damage due to the summer riots and vandalism, that can go in if they're not covered by insurance or something else. PPE expenses, you know, things like masks and gloves and things like that. Also, things like related to sanitation, social distancing, things of that nature. Ventilation systems. This goes a lot towards restaurants too, right? So if you put up partitions, well, you can write that off as part of your PP1 proper expense within that 40%. You can have paid for a drive-through window at your location. That goes to the 40%. So this 60-40 rule, why is it relevant? Well, the 60-40 rule is only relevant for forgiveness. So as long as you spend it on all these things, you're fine. You may not get it all forgiven, as we'll talk about later, but you have to spend it on all these things on this pick list, the payroll costs, and then these other things within the 40%. And you have to document that. Well, how are you going to do that? Well, 2 simple ways I suggest. 1, get a separate bank account for the money and pay everything out of the separate account. Some people find that inconvenient. Well, get a little take on that too. Put the money in the separate account. And let's say you have payroll coming up, it's, you know, $15,483. That's your payroll coming up, the next payroll. take $15,483 out of the new account you set up for the PPP money, put it into your operating account, then have the payroll cut. That's easily traced, right? So those are the two best ways I could think of to track the money. I'm sure there are other ways. Speak to your accountant about it. Now, you know, there's certifications. If you looked at the application, there's certain certifications that you have to make on your application. And pretty much what we talked about before. You were in operation on February 15th, 2020. You haven't closed. You're not in bankruptcy. Typical one is, you know, COVID's affected your business, basically. I don't know whose business it hasn't affected. Some people it's affected positively, but a lot of people who need this loan, obviously it affected them negatively. That's why they're going for this loan. And you have to certify that the loan proceeds will be used for the purposes set forth above in the application, which we just talked about. The average monthly payroll cost, the payroll costs, and those 40% on those other items that we talked about too. And what happens if you don't spend it on these things? Let's say you say, I'm not spending it on this. I'm going to go pay off my credit card. Well, they could call you on. There's actually a case in California. Some bright light went out and bought a sports car. And I guess he put it on social media and they found out about it. So he's under federal prosecution. So it's not something, someplace where you want to be. So use the money the way they tell you to use it. And obviously you can't, as I said before, there's this new shuttered venue operator grant. You can't get both. Although, even though that shuttered venue operator grant, we don't even know much about it yet, other than the basics. If you're going to apply for that, you can't get a PPP loan as well. Auditing. When are they going to audit you? There's there's two agencies here. Like I said, you have the SBA, which we've talked about a lot, and then the Department of Treasury, and the IRS is inside the Department of Treasury. So both agencies kind of work together with this loan. And just as the SBA has published a lot of stuff, so is Treasury. And they have FAQs, frequently asked questions. And number 46, which was, I think, came out in October, but it's still relevant. They basically said, look, if you borrowed less than $2 million, you're not going to be audited very heavily by the government. The lender might audit you, but the SBA probably won't. They could, but they probably won't. If you borrowed more than $2 million, they're definitely auditing you. Right? The other cutoff is 150. They made it simpler to get forgiveness if you were given a PPP loan of under 150,000. It's simpler. So these are the issues. You have to certify this, and if you can't, you have a problem. If you take the money and you do things in violation of your certification, if you do that and you're caught, you're violating federal law. I'm sure they're looking for people to make examples of, so I would avoid doing that. Right? Also, if you took an EDIL loan or another SBA loan, you can't use the PPP loan for the same purposes. So now the question is, well, wait a minute. I used my PPP loan to pay payroll. Now I have my EDIL loan. I'm going to pay payroll with that. Well, you probably can, but you can't kind of do it at the same time. You got to use one set of loans at a time if you're going to do it. But just keep that rule in mind too. As we said before, there's a new application for the PPP. It's on the website. You want to take a look at it. But bottom line is the lender may use that application. They probably do. Some of them don't. You have to file the application the lender wants you to file. And by the way, since there have been a lot of revisions to this application, make sure it says 2021 on it if you're filing for a first draw. Don't use an old one. And you need the documentation. I mean, if you have a payroll service doing your payroll, like an ADP or a Paychex, they've actually had the reports prepared for you. So just go online to your porthole, download the reports, and there you go. Submit them to your lender along with other things they want, like bank statements to show you're in business, certain other things they're going to require, your payroll tax filings, all these things. They're listed here. They're in the regulation. For those of you who went for PPP already, you know what they are, and it's really not going to be that difficult because your lender will tell you what they need. Right? Now we'll talk about second drawer applications. But before we do, should you go to more than one institution? Should you submit applications with more than one? In the past, thank you. In the past, the answer was yes, because the big banks couldn't get these things out. The smaller banks were more nimble. Now, I really don't think you need to do that. The bigger banks have gotten better at it. Hold on one second. Thank you. Gina just handed me a nice glass of water. Thank you. So, I don't think you need to put more than one application in. Now let's go to the second draw. There's a few little differences here, but as I said earlier, you really need to understand first draw to understand second draw, because most of those rules apply with some changes. For second draw, well, you previously received a first draw loan and you spent it. Right? So you can't go from the boat at the same time. So you have to get the first draw and you have to spend it. But keep in mind, both applications close March 31st. So as I said, you applied for it, got all the money, you spent it according to the rules. This time, for a number of employees, they limit the number, by the way, we're on page 8, bottom of page 8. Sorry about that. They limit you to 300 employees. If you remember, on the first draw, it was 500 employees. And now this is a very simple test if you have your numbers correct. You have to show a 25% reduction in gross revenue in a quarter between 20 and 19. You could pick the quarter, first quarter, second quarter, third quarter, fourth quarter, but you stay within that quarter and compare the 2 years. Did you drop by 25% or not? Simple example, first quarter 19, your business grossed $1 million. First quarter of 20, you only grossed $750. Okay, you qualify on that basis, all right, along with the other qualifications. But that's the main qualification. And what's the amount of the loan? For most people, it's the same thing. It's the 2.5 average monthly payroll. And this time you could pick between year 2019 and 2020, whatever's most advantageous to you. You pick your average monthly payroll for that year, and that's your loan. So for a lot of you, it'll be the same as it was for the first draw. Here's a difference. They try to do something for the hotel restaurant industry. So if you have an NAICS code, we told that's with the Census Bureau. If you have an NAICS code of 72, which I said is basically restaurants, hotels, inns, trailer parks, there's a bunch of other things under there. You get 3.5 times your average monthly payroll, 3.5 times your average monthly payroll. So if your average monthly payroll, is 100,000, regular non-72 coded companies will get 250. The 72 coded companies are going to get 350. Okay? So, and the cap on this, if you remember the first loan, the first draw was a $10 million cap. The second draw is a $2 million cap. And once again, they try to get small lenders up and running first. They started on the 13th, accepting applications. All the other lenders started on the 19th. I've heard of people having submitted their documentation and information to their lender already, and they haven't heard anything. This is important to know. When your application has been received by the SBA, they issue a number. That's when you truly know your application is in. So you can have submitted it to the lender. If you didn't get an SBA number yet, it hasn't yet been submitted. Right? So the lender has to submit it to the SBA and get a number, which they then let you know about. So that's when the loan is officially submitted. So I know people who got it in right away and still haven't gotten an SBA number. So you might want to try and keep on top of your lender, though good luck with that, because I understand they're very difficult to get through to at this point. It makes sense sometimes. Maybe you have a relationship with a larger bank and maybe things didn't go so well the first time. Well, now they're going to be more on top of things, whereas maybe the smaller people might be a little overwhelmed, but who knows? Depends on the institution. But just keep that in mind. All right, now we're going to page 9. And loan forgiveness. Well, how do you get your loan forgiven? Isn't that what the goal of this is? Well, you have to comply with everything else that we talked about already. Then you have to show proof. Look, I spent this money, full forgiveness. I spent 60% on payroll costs as defined, and 40% on the other allowable items. If you can prove that, you get full forgiveness. Well, what happens if you spent it all on the allowable items, but you didn't hit the 60% threshold? Well, it's not all or nothing. You'll get proportionate forgiveness. So you get forgiveness as to part, and then as to the rest, you'll have to pay it back. But it's not horrible. It's 5 years at 1%. So not a bad deal in any event. One thing that's very, very important as well, tax implications of this money. So your loan gets forgiven. Voila, it's forgiven. I don't have to pay it back. What about income tax implications? Well, from the beginning of this legislation, the income you receive was tax-free. All right, so that's always been the case. It's still the case. Originally, however, the IRS came out with a ruling that said, if you use PPP money, you cannot deduct the expenses you use it for. So in other words, you got this PPP money in, you got $100,000 in, you paid $100,000 in salary. Is it forgivable? Yes. Under the old rule, could you get a deduction? No. So in essence, that's like making it almost 25% or higher taxable. Well, good news, that's out the window. So now you not only get forgiveness of the loan, but you can deduct the expenses used to pay the loan. So if you got a loan of, say your gross revenue is $1 million, right? And you got a $100,000 loan. Well, the $100,000 loan is not in your revenue for tax purposes, but you still paid, your expenses show that you paid, $900,000 and you have a gross profit of $100,000. Great. You still get to deduct those expenses even if you pay them with PPP money. That's huge. It's a big change. So one thing to keep in mind, not income to you if it's forgiven, and you could still deduct the expenses that you paid with the PPP proceeds. Very big, very important. Right? What are the two main factors in this? Well, first one we talked about. How did you spend your money? Did you spend it 60% on payroll and 40% on the other allowable things? Right? Second thing is they were tracking, although quite frankly, when I looked at the recent regulations, I didn't see much mention of this, but I think you should keep it in mind anyway as things unfold. Your full-time employees. The original legislation, I think this is still the case, but honestly I didn't see anything about it, was that you had to have the same number of full-time employees as you had on on February 15th, 2020 as you had on December 31st, 2020. But there were a lot of exceptions to that rule. Like, for example, if someone quit of their own accord, or they didn't want to come back to work, or you couldn't find anyone to replace somebody. There were a lot of exceptions to that. So just keep in mind that particular rule about full-time employees may or may not still be valid, but it's important to keep that on your radar. Now, people always say, well, wait a minute, I have part-time employees. Well, what do I do about them? Well, they made it very easy. At first, we didn't know. Then in, I think, October, they said, no, we're going to make it easy for you. 40 hours or more as a full-time employee. Okay, great. I have an employee who works 39 hours a week. Well, they're half an employee, 0.5 FTE, 0.5 of a full-time employee. What if I have someone who works only an hour a week? They're also 0.5 of a full-time employee. Does it make sense? No. Is it easy? Yes. So that was the demarcation point. 40 hours, you're considered a full-time FTE. Under that, you're 0.5 and you add it up. So if you had 5 full-time employees and 4 part-time employees, you had 7 employees for purposes of computing this loan. So those were the two major factors, how you use the money and full-time employees. Is full-time employee, this issue about employees still an issue? I'm not positive. Keep it on your radar. Right? Now, let's go back to the covered period of your loan, and this is extremely important with respect to forgiveness. Just to refresh, what's the covered period? From the day you get the money, from 8 to 24 weeks, you pick, and you spend the money within that time. Why is that important? Well, your time to file your forgiveness application begins at the end of your covered period. And how much time do you have? We have 5 years. You might say, well, what's the big deal? I got 5 years. Who cares? Yeah, you do care. Because although you have 5 years to file it, if you don't file your forgiveness application within 10 months of the end of your covered period, you have to start paying it back, whether it's ultimately forgiven or not. So it behooves you to get your application in within the 10 months. Now, one thing I've been telling people is hold off on filing the forgiveness application as long as you can. And that's proven out to be true. Why? Because certainly the new changes under the law that benefit you, like the additional 40%, like you could spend on PEEs and making putting up partitions, things like that, you're not going to get the benefit of it if you filed your forgiveness application before the date of the statute. You're out of luck. Right? So you can't go back. Also, another thing they did, as I said before, $150,000 loan app. If you got less than that, the forgiveness process is much easier. Right? Originally, they thought they were just going to forgive it completely without doing anything. You have to do something, but it's a lot easier than if you got more than $150,000. So my recommendation is still wait a little bit, because their banks are still ramping up their forgiveness process. But do not wait. Do not let that period pass, that 10-month period from the end of your covered period. Don't let that pass, because then you're going to start paying the loan back, whether it's ultimately forgiven or not. So bottom line is, get your forgiveness application in within 10 months of the end of your covered period, but wait as long as you can. Right? There are different kinds of applications. If you look at page 9, item 4, there's the 3508. There's the 3508 EZ. There's all kinds of applications. Once again, make sure you get the most recent one, because they kept changing them. So make sure your forgiveness application says 2021 and you're filing the right one. Or your bank could even come up with one if they want to. Just make sure you're filing the proper forgiveness application and that it is completed. Just going back for a second, because I heard about this today, which I found to be incredible. Somebody borrowed an EDIL loan, and somehow they screwed up the application and missed a digit on their bank account, and the money was never sent to them, and he still can't get the money. It's crazy, right? The loan was approved, and now they can't get the money, and they're in some morass. So these stupid things like this, make sure it's triple checked, because you can go through everything and you miss a digit on your bank account number, and now you can't get your loan. I mean, that just sounds insane to me, but that's the system, so please check everything very carefully. So I put a link in the outline, which I said you'll get next week if you want it, to the applications and stuff. Just make sure you get the right one. Even on the SBA's website, they have a whole bunch of them. They have by date. I don't know why they keep the old ones up there, but they do. And a new forgiveness application was released just 2 days ago, January 19th. So use that one. And so if you started the old one and you haven't submitted it, you may have to do the new one. Not sure. But that's why one of the reasons why I said to wait. So you see here, 3508, 3508 EZ, 3508S, or the lender equivalent. The lender come up with their own application that has the same information. Make sure you file the right one that's dated, the right date. It doesn't say 2021 on it, particularly the end of January, January 19th. You got the wrong one. All right? And they have the criteria, like if you use an EZ, if you have no employees, you're self-employed. you didn't cut, or you didn't cut salary more than 25%, and they all these different requirements. Just get the right application, know the requirements, talk to your lender. I'm not going to go through them all, but there's different requirements for different applications, so be aware of that. I put a little example on the top of page 10. We'll just go through it quick so you understand what I was saying. Loan was dispersed June 25th, 2020. Right? Your 24-week period ended December 10, 2020. You have to file your forgiveness application by October 10, 2021. Gives you quite a bit of time. But, I mean, your spider sense should be telling you that, like, depending how early you got this loan, like late spring, you really should start looking into when should I file this thing? If you got it really early, December might not be the right time, might be earlier for you. So keep that in mind. Once again, I'm going to reiterate, you have to use your money during the covered period. You can't pick a cover period and then use it earlier or later. Just use it within that period. We have these salaries that are subject to limitations. We went over that a little bit before. You could see that for U.S.-based employees, if you took an 8-week covered period, the cap on their salary for purposes of computing your average monthly payroll is $15,385. If you picked a 24-week period, it's $46,154. Pretty big difference, right? But for individuals, C people, it's different. Right? There's different calculations what comes out less. Right? So you look at here, it says for C filers, it's 2.5 divided by 12. Right? The lesser of 2.5 divided by 12, or your net profit, and basically, or 20,833. So that's the maximum. Quite a bit less than for everybody else. Why? I don't know why, but it is. There's also other things regarding solopreneurs, regarding health insurance and retirement contributions. Be aware that you're limited if you're a Schedule C filer. It's very important that you remember that if you're a solopreneur. I strongly suggest anybody who's filing one of these things, have a CPA help you do it. Don't call me because I'm not doing it. I had my CPA do it. But it's important that you have a CPA do it. If you can afford that, you really should take advantage of their services. They prepare something for you to submit, carries a lot more weight. I was talking to one guy who's, does a lot of stuff on commission. He's got scratch notes that no. Get something prepared by a CPA. No scratch notes that you prepared, C Corp filers and S Corp filers, there is a difference. For S Corp filers, the health insurance premiums for the owners of the S Corp, you can't factor that in. That has to be taken out. Why? Because they say you're getting it on your drawer anyway. It's double dipping. What's the rationale? There's general partners and 179 deductions. You should look into that. If you're accountant, 179 deduction, you put equipment in service. Normally you have to depreciate it. On the 179 of the Internal Revenue Code, you can write the whole thing off in 1 year. Just if you've done that, talk to your accountant about that and how that factors in. Okay, as we said before, you paid somebody sick leave, health insurance premiums if they're an employee, not an owner. Yeah, you could deduct all of that, right? And it all goes to forgiveness. Rent under a lease. What if we say, well, I own my building? Okay, and you have a mortgage. Yeah, I do. Just the mortgage interest you can use PPP money for, not the whole mortgage payment. If you bought the property pretty recently, as you know, when you amortize a loan, it's a lot of interest up front. So you're going to get a lot more deduction than if you have had your mortgage for a while. But it's only the interest portion. Business utilities, what are they? Well, gas and electric. I would think this day and age, cell phones, cable, internet connection, all utilities. Car repairs, if you use your car for business. Beyond that, talk to your CPA about what constitutes a utility. Some people are saying, well, in the statute it says transportation. Can I, make car lease payments? The AICPA defines what utilities are, and if it's not in their definition, then don't consider it part of the 40% you're allowed to spend your money on. The AICPA is I think it's the American Institute of Certified Public Accountants. So once again, go to your CPA. I'm giving CPAs a plug today. You might want to consider, well, too late for this now because they were using this employee numbers for December, so too late to bring people back. As I said before, forgiveness is proportional. They have an example in these regulations. Quite frankly, I didn't understand it. But if you don't spend 60% on PPP, you spend less, you're not going to get it all forgiven. That's bottom line. Now, I said before, I'll say it again, the EDIL advance is now, it's forgivable. You don't have to worry about taking that off your loan. That's a really good deal. Remember payroll, 60%, as I said before. Now we're going to go on. We can skip a couple of pages here because we went over a lot of this. We're going to go to page, let me see here. All of this is like full-time employee. I don't think we need to discuss this. We did. All right, I think that's it for PPP. Let's go to the other things we're going to talk about. And you heard me talk about EDIL loans in the context of PPP. Page 15. We're on page 15. You heard me speak about EDIL loans in the context of PPP. So it'd be good to know what an EDIL loan is, right? Economic Injury Disaster Loan, EIDL. And originally, they were for natural disasters. Businesses that New Orleans, let's say, for example, wiped out by Katrina. People in our area, businesses wiped out by Sandy. That's what these loans by the SBA were originally for. And you could have borrowed up to $2 million. But the paperwork that you had to provide them was really pretty onerous. It really was kind of heavy paperwork. Well, under COVID, they decided that you can get these loans if your business was damaged by this natural disaster called COVID. And although the limit is $2 million, they kind of put a $150,000 cap on these EDIL loans. And they're not forgivable unless, of course, as we just said before, you can wrap them into your first PPP loan, which quite frankly doesn't look like anybody who already took their PPP loan and used it are going to be able to do. But hopefully that will change. But other than that exception, the EDIL loan has to be repaid. And, you know, for businesses, 3.75% interest, nonprofits, 2.75, 30 years, no prepayment penalty. Originally, they were taking like heavy security, like a mortgage on your house. Now they just want to know about your business. They're really not being as crazy with documentation and things like that. So if you haven't done it and you're eligible, you might want to consider it. You have to use it for working capital and normal business operations. You use it to pay bills. You can't go out and refinance your business loans. Can't do that. You could use it to pay your bills. Right? As I said, there's collateral requirements if it's over $25,000, but those have kind of been relaxed to a degree. Once again, not forgivable. PPP loans are, EDILs are not, except with that one exception, if you could wrap it into your PPP loan. And I have a website in the bottom of page 15 which takes you to disaster loans. On to page 16, the EDIL grant, or EEIG grant, otherwise known as the EDIL advance. Originally, they said, well, you know what, we're going to give anyone who wants it, and not anyone, business owners who qualify, otherwise qualify for an SBA loan, $10,000. Then they said, no, we're not going to give you $10,000, we'll give you up to $10,000, meaning $1,000 per employee. And they did that. But remember, as I said, you had to kind of deduct that off your PPP loan. No longer. You don't have to worry about that. I had heard that the original legislation said that they didn't give you the full 10, they were going to give it to you now, but I don't see anything like that in the SBA regs. That still might be the case, so if you find some money coming into your account, And you want to know where it came from? Well, Uncle Sam gave you a little gift, and that's not refundable. What they are going to do, they're going to do this targeted EDIL loan, because right now, EDIL loans kind of run out. So they're going to bring out a program with this targeted. Where's it targeted for? Really areas and communities that have really been hard hit, and they're going to come out with this target EDIL loan in advance. All right. I have the basic requirements for eligibility on page 16. Once again, you had to be you're eligible for the EDIL loan. You were in operation on 1/31/2020. But since you can't get in really a EDIL advance right now, if it comes back, if you haven't taken it, look to take it if it comes back. All right, so we kind of talked about the rest of the things on page 16. So if you look on page 17, you'll see once again the links to the SBA's website. And I do recommend you look at it. I mean, even for the layman, there's some decent information on it, and can give you an idea what to go for. So, as I said, you can see there's a deadline of the 31st. I have to update some of this, so that's why you're not getting it now. On page 18, there's a chart that compares the two, and we already talked about this. What's the purpose of the PPP loan versus the EDIL loan? Well, PPP is for payroll. 60% has to be used for payroll. They want you to use it for payroll to get totally forgiven. 40% for other things. EDIL loan, well, business operations, as they define it. Terms. PPP loan up to 10 million, first draw, and then second draw, 2 million, 1% interest. The EDIL loan originally was 2 million, but now they're not giving anywhere near that, probably about 150,000. And the interest rates there, as we talked about before. The EDIL forgivable, full PPP loan, no. The EDIL advance, yes, it is forgivable, as we discussed. The maturity, it's 5 years, not 2 years on the PPP, and 30 years on the EDIL. And it shows you when the payments are due, etc. So the application deadlines have obviously changed too. We talked about that. PPP, it's March 31st. The EDIL, we don't know when they're coming back with it online. One of the small business tax credits I really wanted to talk about was this employee retention credit on the bottom of page 18. And last year when it first came out, it was kind of poo-pooed because it really didn't do much, but now they've changed it. And bottom line is, if your business was really hit hard, you might want to take advantage of it, because it could be worth up to $19,000 per employee. So that's nothing to sneeze at. But let's go through it. Okay, it's an actual tax credit. Now, it's the basic tax concept. A deduction, you deduct against income, but a credit, you deduct against tax. So credit is a lot more valuable than a deduction, because it reduces your tax dollar for dollar. Deduction does not. So it reduces your tax, the tax credit. So, and they were trying to reward people also for making payroll during COVID-19. One of the catches is, before, if you applied for PPP loan, you couldn't get this. They changed that. Now you can't use the proceeds from a PPP loan to qualify for the credit. So I'll give you an example. You're getting a PPP loan, you get the money now, first quarter. You want to apply for the retention credit. Well, if you're using your PPP money to pay payroll during the first quarter, you probably can't apply for the credit in the first quarter. You go to the second quarter, and when you're not using your PPP money, and then see if you're eligible for the credit. So they're saying wages paid in 20 or the first half of 21. So after June 30th, no credit for wages paid after that date. You can apply for it retroactively too now, which is good, right? And as I said, just make sure you're not using the money you paid in salary as PPP money to try and get the credit, because that's a no-no. That's a double dip. Won't allow that. So Very important that you don't use them, both of them, twice. So after you either forgiven or get your, on top of page 19, you're forgiven or pay your money back, your PPP loan, you can apply for this credit. Now, what's the amount of the credit? Well, for 2020, it's 50% of wages for the year up to $5,000 per employee. Right? So that was the max, $5,000 per employee. So you paid someone $50,000, it's $5,000. You paid someone $10,000, it's $5,000. Paid someone $8,000, it's $4,000. All right. So 50% up to a max of $5,000. For 2021, it could be 70% of wages paid in the first 2 quarters, with the max credit being $14,000. So as you could see, for both of them, it could be $19,000. But here's the really going to be the big hurdle, and and I think if you reach this hurdle, you really need this money. For 2020, you had to have experienced a 50% reduction in quarterly receipts over 2019. That's a lot. But it gets even worse. 2020, you had to have 2021, an 80% reduction between that quarter in 2021 and the quarter in 2019. And there's also the employee limit has changed. For 2020, only 100 employees or less. 2021, they raised it to 500. There's a couple of other programs here. Business debt relief, that's if you had an SBA loan, they might forget some of your debt. Look into that with your lender if you already have an SBA loan. Retirement plans, you can forget that now because that wasn't extended to 2021. We're back to 2019 rules with respect to 401ks and required minimum distributions and the amount of loans and so on. So that's on the bottom of page 19. And just one thing you should be aware of. The SBA has a 7A loan program. That's their bread and butter loan program. And you might want to keep that in mind for the future because regular lenders may not be so apt to lend you money going forward. So you might want to have to turn to this SBA 7A program if you need capital going forward. So one other thing too, the last thing I'm going to talk about, which is on page 21, there's this New York Loan Forward program. It's a New York State program. And I had heard that it had been the rule that if you took a PPP loan, you couldn't get it. I just heard that last week they changed that. So if you took a PPP loan or an EDIL loan within certain limits, you can maybe apply for this New York Forward Lending Program. I just checked the portal yesterday and they were still accepting applications, but there's certain requirements as to how much of an EDIL loan, how much of a PPP loan you took, and so on. But before it was like an either or. Either you got the New York State loan or you took a PPP loan. To me, there was no choice to make. You took the PPP loan because you might get it forgiven. The New York State loan is not forgivable. But now you maybe can get both. So it's something you might want to look into as well. So that's all I got for today. Do we have any questions or no?
I guess I might as well ask one.
Okay.
So, a friend of mine who is a 1099 professional referee applied for PPP loans, was approved for it, but is constantly getting notices about how he has to start paying sometime in August. So I told him to fill out the application for the forgiveness. I even supervised him as he did it, and with as little details I know, he tells me he's still getting notices that he has to pay the loan.
All right. Well, the question was talking about someone who's a referee and gets 1099, and now he's getting notices. He's got to pay the loan back. So once again, you got to look at the rules. Does he have a Schedule C? Did he file it? Did he pick the numbers off? These are all in the regulations. It's all really clear. In the outline, even cite the examples and where to go in the pages. So why his lender's doing that? Couldn't tell you. But he's got to calculate the end of his covered period and just get the forgiveness application in by then.
So
And
if he gets rejected once, he can reapply for the forgiveness again?
I would, I would, and once again, get an accountant involved.
Yeah.
Because you do these things yourself, you may not get everything right. They may have missed a box or may have missed something. Get your accountant involved and have them go through it with you. It's really pays considering the amount of money involved, right? So I think we're done. Hope you found this useful, and thank you for watching.